This is the part 2 of the complete beginner forex trading course, and if you haven't watched the part 1 yet, kindly do well to go watch it before you come watch this one so you don't miss out on whatever was discussed in the previous video. So let's get right into it. Next up is, what is a pip? Now, it is very important that we understand what a pip is, because this pip is how the forex market moves. Now, what is a pip? A pip is simply the smallest amount of movement we can see in a currency pair. This pip matters to us traders whenever we are placing orders. It is actually how we make profit on the market or get stopped out on the market, depending on how our trade goes. So it is very important to us as traders. Again, a pip is the smallest number or amount of movement in a currency pair that we care about as traders. So now, how do we identify what a pip is? Well, let's take a look at the euro dollar right now. We can see the last price of the euro dollar, the last price of the euro. The last price of the euro dollar is 1.0806, right? So let's just put that down now. The euro slash the USD, 1.0806, and you can see on the number a smaller number as the fifth decimal number. You can see that, right? That's actually the fractional pip, and we're not going to talk about that. What you need to understand is that the way you identify a pip is the fourth place away from the decimal, the fourth decimal number, right? So if this is the decimal point, we count over 1, 2, 3, and 4. This is what we call a pip, right? And let me clarify this right now, that all yen pairs, JPY pairs, that's any currency pair that has the JPY in it, is going to be slightly different from this. And we're going to talk about that pretty soon, right? So let me quickly change this to non-JPY pairs so you guys do not confuse yourselves, right? So every currency pair aside the JPY pairs, the fourth decimal place is what is known as a pip. So with this, we have the euro dollar with a value of 1.0806. What if the euro dollar goes to 1.0805? How much have we dropped? The euro dollar went down now, and by how much? So looking at this, with the fourth decimal number being a pip, it's pretty easy to tell that we dropped or went down by just one pip, by just a pip, right? And guys, this is how I want you to look at this, right? Which will help you better understand it without confusing yourselves. So now, let's just put down the value of the euro dollar once again. So we have 1.0806. So after the decimal point, we have the first number, we have the second number, the third, and then the fourth. Now guys, this is how I want you to look at it, which will help you, like I said. So the first column here, we have this column to be the ones, we have this column to be the tens, and then we have this column to be the hundreds, right? So with the above example, we notice that the euro dollar, the value of the euro dollar dropped by only one pip. How can we tell? How did we know that? So when we look at this table here, we realize that the movement happened on the ones column, or in the ones column, right? That means that anytime this moves, is going to be equivalent to one pip. Again, when the changes happen on the tens column, it's going to be equivalent to 10 pips. And when the changes happen on the hundreds column, it's going to be equivalent to 100 pips. I hope that I'm making sense here. Now, that makes it so easy. That makes it really easy to say that when the euro dollar moves from 1.0806 to 1.0816, how many pip movement do we have here? Since the movement was at the 10th column, or happened at the 10th column, right? It's pretty easy to say that it's moved 10 pips based on the explanations that I gave right now. It's pretty simple to understand it that way, guys. So let's do one more example to make sure that you guys understand it very well. Since this is the foundation of the trading career, you just can't do away with this. You just can't do away with this. So let's do 1.0906. At this point, how many pips did the euro dollar rise? If the value of the euro dollar moved from 1.0806 to 1.0906, How many pip movement is that? Well, let's just take a look at the table. So with this, we have the ones column, 6, which is still the same. The tens, 0, still the same. The hundreds, which was 8, and now 9. So with this, how many pip movement do you think the euro dollar moved? With the explanations given, that means the euro dollar moved by only 100 pips. So guys, that's the way you want to look at this. And I'm sure that you guys are following along, right? Let's do one last example with a different currency pair, okay? So let's see. Let's go for the Aussie versus the dollar. Let's go for the Aussie versus the US dollar. So we can see the Aussie versus the dollar has a value currently to be 0.6513. So what do you think the pip movement will be if the Aussie dollar moves to, if the value of the Aussie dollar moves to? How many pips did this currency pair move? I'll give you a second to be able to tell me. Hopefully, you were able to say 100 pips. And that's the answer. Very simple, guys. So in order for you to be sure that you understand this, just give yourselves a little test, all right? And trust me, you're going to be good on that. Now, all these we talked about are non-JPY pairs. All that we just discussed are all non-JPY pairs, which means that they are currency pairs that has no yen attached to them, right? So any pair that does not have JPY would be looked at and valued like this with the 4 decimal places. So what about the yen pairs? How do we deal with the yen pairs? Okay, so let's do an example on that right now. Let's go for USD JPY, the dollar yen. So if you look at the value of the dollar yen, the USD JPY now, which is 151.40. Again, like I said, all currency pairs with a JPY attached to them are looked a bit differently. So with what we are looking at now, the USD JPY has only 2 decimal places, or in other words, they have only 2 figures or numbers after the decimal point. So for you to understand it better, let's pull down our table so we know and understand how it's done on this kind of pairs, right? So we have the value of the dollar yen as 151.40. So we have the first number, which is the 4, and the second number, which is the 0. So with this, we know our 1 pip is the second figure after the decimal point. And so the 0 is our ones, the 4 is our tens, the 1 is our hundreds. So with this, when the value of the dollar yen moves from 151.40 to 151.47, how many pips did it move? If the market moved this amount of pips from 151.40 to 151.47, how many pips did the market move? Well, so since the 0 column is our ones, we can boldly say that the market moved only 7 pips. The market moved 7 pips. Another example, what if the dollar yen, the USD JPY, moved from 151.40 to 152.40? If the price of the dollar yen moves from 151.40 to 152.40, how much has it gone up by? So we can boldly say it went up by 200 pips on the dollar yen or the USD JPY. So again, in order for you to make sure that you grasp this properly, just try to test yourself on them, right? There are a couple of other pairs with the JPY attached to them, okay? So just go through them and then make sure you understand them so well. So yeah, I hope that you really have a clean understanding on what a pip is and how to count pips in terms of currency valuation against others. And don't forget, guys, this is a very important foundational steps to beginning your Forex trading career. So now that we know what a pip is and how to count pips, the next we're going to talk about is what the actual value of a pip movement is, and basically how to know how much profit you make on the market or how much loss you make on the market. What is the value of a pip? So far, we know what Forex is and how it works. We know what a currency pair is. We know what a pip is. And now we want to know how much money we make on every pip movement on the market. Because to you in your trading or as a trader, when you buy and the market moves up, you make money. When you sell and the market goes down, you make money as well. So how do you actually know that? How do you know the exact value or amount of money you make on these pip movements or the exact amount of profit or loss? Now, the value of a pip depends on the amount of currency in which you are trading, meaning the amount of units you are trading. in the currency market, we are trading a set of units, and these units comes in sizes. They normally come in 4 main lot sizes. So if you are trading units of currencies, right, let's just do that in a table form so you understand it better. Do not forget that the amount or value of a pip depends on the lot size or the amount of units you are trading. So we have the name of whatever units or lot size you're trading. We have the size also, and we have the value per pip also here. Now guys, take note. Every currency pair that ends in USD is going to be for this particular example, right? Other currencies are going to vary, but not by much, right? So this particular example is just to generalize the understanding on the actual value of a pip, yeah? So the first one is what we call a standard lot. Now, if you are trading the standard lot, that means you are trading 100,000 units of currency. And so if you are trading 100,000 units of currency on any pair that ends in USD, then this is the exact value per pip. If you have one standard lot that you trade in, or every 100,000 units you trade in, then you are trading at a value of $10 per pip. So if you are trading a standard lot on the euro dollar, that means every pip movement is $10 per pip. Every 1 pip movement is equivalent to $10. So the next size of units is called the mini lot. Now, mini lot means that you are holding and controlling 10,000 units of a certain currency, which means every pip movement is equivalent to $1 per pip, which means for every pip movement on a currency pair with a mini lot on, its value per pip is $1. And again, this is on dollar pairs. This is just to generalize the whole idea, but it's similar on other pairs as well. So the next is what we call the micro lot. When you have a micro lot on a currency pair, it means you are controlling 1,000 units of a certain currency, and the value per pip on this is 10 cents, which means you are losing or gaining 10 cents per pip. So for every pip movement with a micro lot on is going to be 10 cents up or down in your account. And the last, which is the fourth one, is called nano lot, which we're not going to go deeper into. A nano lot means you are holding or controlling 100 units of a certain currency, and the value per pip on this is going to be a penny, which we are not going to talk about. So now let's try to figure out how much we actually make in the changes in price or anytime the market moves. So for instance, if you bought the euro dollar at a value or at a price of 1.0806 and it moves to 1.0906 using a standard lot, how much money will you make or made in that pip movement? So let me try to break that down for you guys so you understand it perfectly well. So in this particular example, we see that the market moved 100 pips, right? So we multiply that 100 pips by the value per pip, which is 10, multiplied by the standard lot, which is 1. So we have 100 multiplied by 10, which is the value per pip, multiplied by the standard lot, which will give us $1,000, right? This means that you made a profit of $1,000 on just this particular trade. So again, let's say we trade 4 standard lots on the same example. In this case, what will be the actual value of the pip movement with the 4 standard lots, right? So with the same example, we know that the market moved 100 pips, right? So we multiply that by the value per pip, which is 10, and multiply that also by the standard lot. So in this case, how many standard lots did we trade with? 4. So the standard lot here is going to be 4. So when you multiply all, what you're going to get is $4,000 as profit on just this trade. So let me try to break it down this way so you guys will understand it much better as to what goes on anytime you place trade, right? So if you buy the euro dollar at a price of 1.0806 with one standard lot and it moves to 1.0906. So now when you do this, essentially you are telling your broker that you need 100,000 euros. Now your broker is going to charge you the exchange rate that the market currently has, which is 1.0806. So 100,000 multiplied by 1.0806, which will give you this. So this means your broker will charge you $108,060 for you to get 100,000 euros. Your broker gets you that 100,000 euros and take $108,060 $100 from you or from your account. So you then hold that 100,000 euros waiting for the market to either rise or fall. In this case, the euro dollar, waiting for the euro dollar to either rise or fall. And remember that in this example, we bought the euro dollar at a value or at a price of 1.0806 and it went up to 1.0906, meaning that you still have the same 100,000 euros you are holding. But now, instead of them having a value of 108,060 US dollar, they now have a value of 109,060 US dollar because of the difference in the exchange rate, which in this case, it went up. So when you subtract this from this, that's why you are getting $1,000 as profit on just this trade. So this is how come you are able to make 1,000 US dollar as profit on just this one trade. So this is how it basically works when you have a trade on or when you place a trade. So let's do one example also on a mini lot using the same euro dollar. So now with the same 100 pip movement, okay, and let's assume that we are trading 3 mini lots, okay. So we buy the euro dollar at a price or at a value of 1.0806 and it went up to 1.0906. You remember what a mini lot? You remember what a mini lot is? A mini lot means you are trading 10,000 units of a certain currency. So if you are trading 3 mini lots, you are holding or trading 30,000 units of a currency. Now again, a mini is worth $1 per pip, meaning that any pip movement that will happen on the market when you are trading a mini lot is equal to $1 per pip. So we still have the same 100 pip movement in this particular example, right? So we have 100 pips multiplied by the value per pip, which in this case we know it's $1 per pip. So we have 1, and then we multiply that also by the number of mini lots we are trading with, which is 3, right? So in all, we're going to get $300, meaning the profit you make on this trade alone is $300. So let's try to explain what really went on before you arrive at getting $300 as profit, right? So with this, what you are saying is, broker, I need 30,000 euros. The broker then is going to charge you the exact current rate, which is 1.0806. So we have 30,000 multiplied by the rate 1.0806, which is going to be 32,418 US dollars. So when they charge you this, you are holding 30,000 units of euros. Whilst holding, just as we did in the previous example, the euro goes up by 100 pips. You still have that 30,000, but now with a different rate of 1.0906. So you multiply 30,000 by 1.0906, which is going to be 32,718. This actually means that when you give them their 30,000 back, they are going to owe you 32,718. So when you subtract this from this, we are getting $300. So this is how come we're able to profit $300 on this particular example, on this particular trade, right? Just on this trade, right? So this is actually how a pip works in terms of what the value of a pip is. This is how you are able to know or tell how much profit or loss you make on a particular trade. And again, this is just a foundational step to your trading career. Alright guys, so I hope that you really enjoyed this video and I hope you got value out of it as well. Kindly do well to subscribe to be part of this great channel. Like, leave a comment down below, and I'll see you guys in the part 3 of the complete beginner forex trading course. See ya.